This trade may most likely come back to bite me in the ass, but before we dive into conclusion, let's take a look at everything that really matters. Welcome back to the channel. Chukwu Nicholas here, and do well to hit the subscribe button because we share knowledge over here. Let's move. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So this is the British pound against the US dollar on the 4-hour chart, and before we start to look at what happened in this whole situation, we're going to take a good look at the fundamental aspect of this market. So right here I have my trusty charts, right? This is the chart I like to always look out for. So we're looking at the British pound against the US dollar, and clearly you can see there is a clear winner. One is green, one is red. The US dollar is beating the British pound in every ground. On the overall ground, it is clearly having better news than the British pound. On the average comparison, it is having clearly better news than the British pound. In the recent 14 days, we've seen news from the British pound in the recent 14 days, and well, every single news has not really been good except the leading news, right? The leading news, quite okay, still good. The coincidental news, not so good, and then the lagging, just right at the neutral spot, doesn't even do any real good. And for the US dollar, we have a situation similar. However, it seems to have better information right now for its lagging and for its coincidental news, which keeps it way above water, though its lagging news is not also good in the recent 14 days, that is. But overall, taking a good look again at that comparison, just the two of them again, it's the British pound, the US dollar, and clearly there's a winner. Now, putting it into the pair comparison, let's see what the pair looks like. You come down here to the British pound US dollar, and you can clearly see the overall comparison, it is red, bearish. You should be shorting. Fundamentals, this is the data saying this. Let's dive into the real data itself. So right here we have the British pound information, and as you can see, the overall situation, we have the bearish overall and the coincidental news being bearish, while the leading and lagging are somewhat neutral. In the recent 14 days, the sets of news we've got has had the leading feeling quite bearish, quite bullish, and then the coincidental and lagging, or rather the coincidental is bearish and the lagging is just okay. And in the recent 4 days, that is a set of news in the recent 4 days, you can see that there has been no leading indicating news and no lagging indicating news, but the coincidental news that came out is bearish. So in other words, this economy is most likely going down slowly right now. And just for you to look at that carefully, I'm going to put out only the coincidental news, and then we'll take a good look at the ones that is recently 4 days away. So these are all the coincidental news from the British pound. We have the retail sales monitor year over year coming out not so good. The router Thomson Reuters IPSOS PCSI for December is bullish, but it's just small, just 1 point away. It's great point. The construction output is bearish. The UK construction outputs in general year over year is bearish. The British pound gross domestic products, that is GDP, is bearish. The index of service is bearish. The industrial production is the only thing that seems to be going good right now in the recent news, and all of this news, as you can see, is 0 days away. So it was released obviously today, as you can see today's date right here. They were all released today. A lot of this news was released today. Manufacturing production is bearish. The GDP 3 months over 3 months changes is bearish. The trade balance is bearish. The British pound is literally not good right now. Let's take a good look at the US dollar. I'm going to zoom in for better visibility. Now, this is one guy that gives us news round the clock, really crazy. But overall, we have the lagging news saying it is bearish, right? The lagging information is bearish, but the coincidental information is neutral, as well as the leading indication is neutral. Now, in recent days, right, in the recent 14 days, recent 2 weeks, we've had the lagging news come out as very bearish, meaning the lagging information in the recent days has not been so good. The coincidental information has been just neutral, bouncing around it. So has the leading indicator. But in the recent 4 days, what have we been saying, right? We have been seeing coincidental news quite bullish, and the leading news is still bearish, the lagging news heavily bearish. So let's take a good look at this set of news with the 4 days situation. So we're going to look at less than 4 days, and these are the lagging information we've had. Only the crude oil inventory was good, right? The caution crude oil inventory was bad, the gasoline inventory was bad, the wholesale inventory was bad, and the mortgage rate 30 years was bad. Now, when I say bad, I don't mean the economy is dead. I'm just saying it's not a news that you will want to use to go ahead to go buy things, right? To go buy the currency. For the leading indicators, we have the purchasing index, the jobless claim. The jobless claim came out good. Now, this is the only good thing around here, the continuing jobless claim, meaning people who didn't have jobs before and currently don't have job, they reduced compared to the initial. The people who didn't have job before and the people who don't have job now increased. So the initial jobless claim, brand new entries, brand new jobless claimers, right, increased. The jobless claim in the 4 weeks average is looking bad. It's going down. It's still going bearish. The 1 year inflation expectation, that is a CPI expectation for the next 1 year from New York, is neutral, and the leading index is also neutral. The purchasing index, that is actually not showing good lights. And for the coincidental news, we have a lot of news, like a whole lot, but most of these news are mixed. That's the thing, it is really mixed, but it seems like in general the good ones outweigh the bad ones. As you can clearly see from the color in here, you can see obviously more greens than red and see the good ones and the bad ones and the neutral ones. So the bad ones are the crude oil imports, the distillation fuel, oil stockpile, the Fed balance sheet. Wow, that is not so good. And the imports red book, mostly crude oil and balance of the accounts, while the good ones still kind of crude oil alongside, but more of jobs. So the job side of the US is looking better than the British pound generally. That's what it's just showing right now. So in other words, looking at everything you just saw on the fundamental, I believe you already have a perspective of the US economy and the British pound economy, simply looking at the regional data. And all of this takes us now to the chart where we look at and see. As you can see, this is why I said this trade is most likely going to bite me in the ass. Why? Because the British pound is not, our British economy is not doing as good as the US economy right now. And if it continues, obviously today is Friday, we're going to see this sound trend, but there's every tendency I'm going to get wiped out of this trade, and price is going to return up a little bit on Monday, Tuesday, and that will be like a deciding factor. So if at that point this break of structure we see right here still holds, then we will be seeing more push to the downside. Now, unlike what you want to see in the euro US dollar right now, the euro US dollar seems like it is going to be trailing somewhat sideways for a while. And why do I say so? So fundamentals again, we're looking at the euro this time against the US dollar, and what you can clearly see here is the euro, the US dollar, they are not so far away from each other, though the US dollar still has like better cap rate, as you can see, 47.5 compared to 45.5. However, the euro recent news has been keeping up real good, like it's real close, as you can see, and on an average it is far more better than the British pound, dealing a whole lot more better than the British pound. You can see all three of them right here. This is the euro, the British pound, and the dollar, dealing far more better. Now, looking at the pair comparison, you can see the euro still has like a great fighting chance. It is just 48%, so it is not so good for the British pound, but however, it has a far more better fighting chance than the British pound. So there's a tendency for until it happens. Looking at the fundamental for the euro, we have very good situation here. I'm going to zoom in so we get a whole picture. But as you can see, the recent 14 days has been absolute good for them, though they don't have any recent news for us in the recent 4 days, but they've been real good in the recent 14 days. It means they are trying to seriously keep up. So if news comes in next week and we do not have good days next week, then would most likely fall into that trap as the British economy, the British pound economy. So in other words, trading right now, the euro against the US dollar is most likely going to be sideways. The British pound against the US dollar, I think I am in definite soup. So I am definitely in trouble. Most likely going to lose this trade. I just want the price to close below the support zone, the supply zone, and the demand zone, and finally walk out of this trade, out of it a loss. Whatever amount loss it is, walk out of it with that loss. So see you guys in the next one. Peace.